Ladies and gentlemen, Joshua Salvetti, welcome to another lesson of the High Performance Trader. And today I want to break down the four main components that go into each and every single candle, right? So as intraday traders, right, we dive deep into intraday, right? So that's trading on like the 2 minute, 5 minute, 10 minute, 15 minute, even 1 hour time frame, right? But what I want to break down in this lesson today are the four main price points, right? High, open, close, and low that actually make up a candlestick and why they're so important, right? So basically, in a nutshell, in the 1800s, a man by the name of Mohisha Hama developed the candlestick, right? Now, this was a rice merchant, and he used this to measure rice, right? The price of rice, because back in the day, they used to trade and barter with the rice. And based on the supply and the demand of rice, the price then increased or decreased, right? So it's very cool that we still use and implement each and every single one of these candles today, right? Every single candle has an open. Every single candle has a close. Every single candle has a high. And every single candle has a low. So today, in this lesson, we're going to break down how these candles, right, especially these 4 points, can be used to identify critical levels, and then based on the chart patterns within those levels and volume, how you can put on high probability trades, right? So before we go any further, ladies and gentlemen, check out some of the links below, right? This is my Instagram at High Performance Trader. I break down tons of super valuable content, daily recaps of each and every single trade that I take, winners, losers, what I was thinking, how I identified the probable opportunity, and how I took it, right? But over here in the Linktree link, you're going to find everything that I offer, right? High Performance Trader Bootcamp, the mission statement, right? Trader Bootcamp itself, and the Discord server. So recently I have uploaded Trader Bootcamp onto the Discord, and I am currently offering one-on-one mentorships, right? Get involved because there's only a couple spots left, right? But this will get you 90 minutes every week, plus more, tons of more stuff. Time with me is what I'm talking about. But the one-on-one mentorship, $39.99 a month, you're going to get one-on-ones with me. We're going to break down the strategy. We're going to break down risk reward. We're going to break down options. We're going to break down SPY, QQQ, critical levels, how I identify and adapt to market conditions, and what it exactly is I mean by that. And you're going to get the whole Trader Bootcamp online course, which is extremely effective, right? And breaks down the market auction, market concepts, strategies, and market psychology, and my most favorite, trading metrics, how to measure yourself, how to measure your strengths, how to measure your weaknesses, and how to grow as a trader, right? Because a lot of traders want to trade, but they don't know or have the correct steps that it takes to evolve as traders, right? So super valuable stuff. Get involved. $19.99 summer special, 5 spots left, and the one-on-one mentorship, 90 minutes a week, me and you breaking down the type of trader that you need to become, right? So super valuable. Get involved. Limited time only. All right, back to the lesson. So today we're going to break down the four main price points of a candle, right? So before we go any further, each candle on the daily time frame, or any candle at that point, but I want to break down the daily time frame, has four main price points, right? High, low, open, close, right? Super simple. So if those are the four main price points on a candle, daily time frame, and me and you are intraday traders, right? And you go over to the 5 minute, doesn't it make sense to highlight these levels before the day begins? Absolutely. So this is actually exactly the way that I identify my pre-market plan. So I am a very big price and volume analysis trader. I like to identify supply and demand zones, areas of value, and trade off them. So if we're talking about areas of value, you must identify the high, right? Previous day high, the close, which is end of day, which is the price at the end of the day, right? Then you have open, which is the opening print, and then you have low of day, previous day low. So if I took one of those daily time frame candles and just expanded it out into a bunch of little mini candles, you would see something like this, right? Now, this is where we identify our critical levels, right? We just did previous day low, open, end of day high. So this was the day prior to CPI, or I'm sorry, this was not CPI. But anyways, based on what happens off these levels, I'm looking to take that information and do what I call identify market conditions. So there's only two types of market conditions. There are bullish and there are bearish, right? I'm either looking to trade with bulls or I'm looking to trade with bears, right? And based on who's in control of these levels, I am going to take high probability setups from level to level to level, right? So how this day worked is pre-market, we were holding very high, or we were holding above previous day high, right? Which was 44928 right here. So in a bullish scenario, and I break this down each and every single day in the Discord, we run through a bullish and bearish scenario, right? Because you cannot try to predict this stuff. You must only react to price action, right? So what we do over here at the High Performance Trader is we identify critical levels, and based on whatever happens in those levels, we then react with high probable setups, right? So it's very important. A lot of traders get confused. If you are a part of a team and that person or coach or mentor is trying to predict price action, be careful, right? Get yourself a part of a team of a trader or a mentor that is prepared for a bullish and bearish scenario, right? Because we cannot predict the market. I don't even try. Instead, I get very well at understanding the candles based on these critical levels, right? It's going to give you everything you need. So price is above previous day high, which is pretty bullish. So in a bullish scenario, I'm looking for buyers to show up here, and I'm going to target 451, and then I'm going to target 453, right? Those are my targets. But if we cannot hold previous day high, that is a bearish indicator, right? That means sellers, because there's two traders at every price, right? There's a buyer, there's a seller, right? Now, based on that trader's beliefs, he either thinks price is going to go up or he either thinks price is going to go down, right? We don't know what they're thinking, but based on price action, we can make a pretty good high probable guess, right? A hypothesis. So price then breaks previous day high, right? Very bullish indication. Next level, end of day, right? Breaks end of day. Once again, very bearish indication. Now we start playing around at the open, right? Now open is literally the opening print that price opened at the previous day. Notice I'm grabbing my levels from the previous day. Price literally plays around at the open, comes up, tags end of day, rejects it. So sellers are not only breaking through end of day, they are now defending end of day, right? So you guys hear me say this all the time in my videos, in my Discord, right? What I'm talking about here is that large money is defending a critical level. If we, as retail traders, cannot move the market, we must get good at identifying what large money is doing. If large money is defending end of day, we want to trade based off that information. We don't want to look for longs here, right? Because if we're looking for longs here, that would be implying that conditions are bullish, right? And until buyers prove to me conditions are bullish, I must assume conditions are bearish, right? So price is battling the open. It's battling end of day. I'm not making a trade until a breakout happens here, right? This is congestion. And then bam, price then breaks below the open. Super bullish indication. And now this right here on this pullback is when I'm looking to enter this trade, right? Once the candle breaks this critical level, this is also a good area to enter stop loss right above the open. We are now risking 30 cents here. And note we're targeting, guys, previous day low, right? Level to level to level, right? You play off end of day, targeting previous day high. You play off end of day, targeting previous day low, right? Because these levels are what we like to call an imbalance, right? Now, the reason price always tends to make it to the imbalance, right, from previous high to previous low, from end of day to previous high, right? The reason why price gravitates to these is because there's large orders at these levels, because this is where smart money has defended before. If smart money showed up yesterday at previous day low with strength, with volume, there is a high probability that they're going to show up again. For whatever reason, they like that price. Now, we aren't making assumptions here. What we're doing are making high probable trades, right? These are where we get our entries. These are where we get our targets, right? If you play these levels, guys, you're going to have such a massive edge over everybody else, right? So once again, we have our four levels: previous day high, end of day, in the open. Sellers defended each and every single one. So now, for what works for me is I'm in a short play targeting previous day low, right? Price then falls down, and rips all the way down to previous day low. This is what we call the market imbalance, right? You captured that trade, you'd have made over 200%. Crushed it. 0-day options. Now, let me show you something even cooler. So price comes down to previous day low. Rejects. What's that telling you? That's literally telling you that the buyer that was there previously is here again. This is what we call, for all my supply and demand traders, a demand zone. Why is it a demand zone? Because the demand for shares here are much higher than the supply of shares. Anytime there's a greater demand for shares, right? Think about Mahisha Hama creating the candlestick based on the price of rice, right? The price would increase because more people wanted the rice, right? The price would then decrease if not as many people wanted it, or if more people were selling it, causing an excess of supply, right? So based on the levels of supply or the levels of demand, you then get price action, right? This is what creates price movement. For us to understand and capitalize on this, we must understand price movement. So it's very cool. Think about it. You have a bank, institution, could be George Soros, doesn't matter. Someone with a lot of money bought 20, let's just say 20 million shares here. Price comes back down to this level. He buys another 20 million shares, right? Notice, price doesn't just come up here, right? Price literally rips all the way back up to the opened and then right to end of day. Now, end of day is a critical level, not only because it's one of the 4 price points, but look at the volume that goes into the end print at the end of every single day. You're going to see 5x, 6x, 7x, 10x every single day at the end of the day, right? And this is literally telling you, price and volume analysis, that it's very important. So you must identify end of day every single day. I'm telling you, it's a game changer. So I just think it's very cool here that based on identifying market conditions, right, bearish, you can then make a massive move to the downside. Buyers defended it, right? They liked this level and brought price all the way back up to end of day. And then sellers then defended that. Boom, bringing price all the way down to previous low, right? Guys, I cannot make this stuff up. This is how the market works. If you want to learn more, smash the link below. Get involved with the Discord. Like I said, one-on-ones or the summer special, does not matter to me. Get involved in the team, guys. I will see you there.